CBN injects additional $150 million into FX market to boost Naira. Imagine this: a nation's currency under relentless pressure, investors pulling out, and global markets in turmoil. But what happens when the central bank steps in with a bold move? Today, we uncover how Nigeria's central bank is fighting to stabilize the Naira by injecting $150 million into the foreign exchange market, and why it matters more than ever. Welcome back to Business News Report, where we break down complex financial news into actionable insights for you. In today's episode, we're diving deep into the recent intervention by the Central Bank of Nigeria, CBN, and its implications on the Nigerian economy. The big move: CBN steps in. At the start of this week, the CBN injected an additional $150 million into the foreign exchange market. This strategic move aims to shield the Naira from mounting pressures caused by high demand for US dollars. According to analysts, sustained interventions like these are expected to keep the exchange rate range-bound during the second quarter of 2025. But here's the catch: this isn't the first time the CBN has stepped up. Just last week, the Apex Bank sold a whopping $635 million to authorized dealer banks in a bid to boost liquidity levels in the forex market. Despite these efforts, challenges persist as offshore investors continue to exit their positions in Naira-denominated assets, driving further demand for hard currency. Market dynamics: what's really happening? Let's talk numbers. On Monday, the USD/NGN pair fluctuated within a range of 1,593.10 Nigerian Nairas to 1,630 Nigerian Nairas. The CBN intervened at rates between 1,593.20 Nigerian Nairas and 1,623 Nigerian Nairas per dollar to curb volatility. However, experts warn that without additional inflows or increased oil revenues, the country's gross external reserves could face further depletion. Data shows that reserves have already dropped to $38 billion, a concerning trend if left unchecked. Why does this matter? Because Nigeria relies heavily on oil exports for foreign exchange earnings. And unfortunately, global commodity markets aren't helping either. Oil prices took a hit earlier this week despite some positive signals, such as exemptions for electronics from U.S. tariffs and a rebound in China's crude imports. Brent crude fell by 42 cents, or 0.65%, to 64.34 barrel, while U.S. West Texas Intermediate, WTI, crude slid by 53 cents, or 0.96–0.97. Global context: trade wars and economic fears. Here's the bigger picture. Ongoing fears about the prolonged U.S. China trade war continue to weigh on global economic growth prospects. These tensions are dampening fuel demand worldwide, which directly impacts oil-dependent economies like Nigeria. And it doesn't stop there. Gold prices also saw a sharp decline after reaching record highs earlier this week. Spot gold fell by 1.1% to $3,200.11, while U.S. gold futures dropped by 0.93 to $16.20. Analysts attribute this dip to improved risk sentiment following tariff exemptions on smartphones and computers. What does this mean for Nigeria? While the CBN's intervention provides short-term relief, long-term solutions require addressing structural issues. For instance, diversifying revenue streams beyond oil, attracting sustainable foreign investments, strengthening policies to stabilize the Naira. Without these measures, even frequent injections may not be enough to counteract external shocks or investor withdrawals. Key takeaways: the CBN injected $150 million into the forex market to stabilize the Naira amid rising dollar demand. Gross external reserves stand at $38 billion but remain vulnerable without fresh inflows. Global factors, including the U.S. China trade war and falling oil prices, add complexity to Nigeria's economic challenges. Sustainable solutions will require diversification and policy reforms. So, what do you think? Can the CBN's interventions turn the tide for the Naira? Or is Nigeria heading toward tougher times ahead? Let us know your thoughts in the comments below. If you found this video insightful, don't forget to like, share, and subscribe to our channel for more updates on global finance and economics. Hit the notification bell so you never miss an episode. Until next time, stay informed and stay ahead. See you soon.